You've been a top executive, now CEO of Unilever. You were at the very top of Nestle and also had a long career and very successful career at Procter & Gamble. What have you picked up from each one of those different places?
I think the main thing that is that these are all great companies driven by strong values, and these are companies increasingly more appreciated for what they do to the economy, even more important so than before. So I think these values permeate these companies, doing the right thing for the long term, operating with a high level of integrity and trust, investing in their people, wanting the communities in which they are to be as successful as the companies themselves. So these values permeate. Then obviously you have differences. Differences depending on where the origin is, which often affects the culture. Differences in mix of how you run it, organizational models driven by the brands that you sell. So these differences are there. Mm-hmm. We try to benchmark not against one company or another. We just try to benchmark against the best in class. On manufacturing, I might look at Toyota. On supply chain, I might look at Federal Express. And likewise for some of our competitors, which we respect a lot.
Mm-hmm. If you were to isolate a lesson, a key lesson that you've learned as a manager, what would it be, and how did you learn it?
Well, there are different lessons, I think, to be learned from that. I think the first thing is purpose-driven and values-led. I think it's very important. I think over my career is if your values, your personal values, are aligned with the company's values, you're probably going to be more successful longer term than if they are not. Mm-hmm. If they are not, it requires you to be an actor when you go to work, or to be a split personality. If these values are totally aligned, and we all know that work-life balance is more and more become a life balance of which work is part of it. So it's very, very important. The second lesson I think that permeates all of this is the importance of people. At the end of the day, especially where we are sitting right now, in positions of leadership, it is the quality of the people, the investment in people. And long ago, I think I have understood, perhaps a little bit later in my career than you normally want. In the beginning, you're self-centered, but at the end, you understand that if you invest in people, they invest in you, and your business is going to be successful.
The question on everyone's mind is, where does the world economy go? How do you see it evolving over the next 2 or 3 years? And what does it mean for your sector, and more specifically for Unilever?
I think there's a broad consensus that it sort of has bottomed out, but at the same time I've been on the record for a long time that I think we'll be in for a slow and long recovery, to be honest. You look at the deleveraging that needs to happen in the economy. The US government, 20 trillion debt now over 10 years, 70% of GDP. Companies need to deleverage, financial institutions need to deleverage. So I think personally that we will be in for a long and slow recovery, and we'll plan our business accordingly. What does it mean for us? Obviously, is it's a different business environment. Some people talk about a reset. We definitely will see slower growth in many of our markets, and actually start to see that already. Different role of government that will affect us, different consumer expectations, and all these things have to be taken into account as we sharpen our business strategies moving forward.
One of the overused phrases of this cycle is don't let a recession go to waste. Yeah. What are the silver linings for Unilever in these challenging times?
Well, I think there are many opportunities in this, as you say, and obviously you have to peel the onion and get very close to the consumer, and you see many opportunities for anybody that understands change and can actually lead that change, can turn it into a competitive advantage. We clearly see different consumer behaviors coming out of this recession, which has been the deepest since the Second World War. We actually turn that into an advantage once we understand those. It is clear that big ticket items are being postponed in purchase. Fortunately, we're not in that business. We see changes in lifestyle. People not going to movies but watching it at home, not eating out but eating at home, and that obviously benefits us. Products like Hellmann's or our savory products, and we capitalize on that trend. We definitely see a switch from discretionary items. People not going anymore for the premium skincare products or perhaps the Starbucks. Again, that benefits us. We're just introducing in the US products like P.F. Chang, meals at home, or the Starbucks ice cream. And then last but not least is our own categories, which are the daily necessities, which is basically where we have the bulk of our business. And frankly, there you really have to look at it at different parts of the world. The US, Europe requires one set of actions. But the developing markets, which clearly have seen a decoupling, I think we will have a slightly different strategy to be successful there. As you say, never waste a good crisis. I think it could not have come at a better time for me personally, because long ago I put myself at ease that I wasn't the cause of this crisis. And coming in new as a CEO of Unilever, it's an ideal chance to galvanize a little bit more the change that we still needed to be truly competitive.
You've commented many times about the need to increase the metabolic rate or the executional ability of Unilever. Many struggle with that. How are you going about it?
I've always said execution is strategy in our business. This is consumer goods. I cannot speak for other industries, but for us, execution is strategy. It's absolutely important. In fact, the strategies that we have as companies might differ a little bit, but that's 5% or 10% of the work, and then the 90% is execution. I've seldom met a consumer, and I go to a lot of home visits or go around with shoppers, and I've seldom met a consumer who buys our wonderful Knorr products or Lipton or our Omo or Skip because they like our strategy. So our business is a very simple one of getting the right products at the right place, at the right quality, the right price all the time. And in our industry, actually, share movements are often happening because of lack of execution on the other side, if you want to. So this is a very, very important part of us. Now, organizations normally don't tend to gravitate towards execution because strategy is the sexy part of all of this. So we make it very clear that execution is important here, and we celebrate that. Obviously, we drive in the discipline. We have the accountability as part of driving the performance culture. And I think all these elements that we're putting in place right now will help us drive that executional element higher in the organization.
For you as the CEO, how are you signaling the importance beyond communicating? Are there other tools that you're using to drive home the importance of execution?
You have to walk the talk here as well. So when we go to store visits or in-home visits, we do roll up our sleeves. We talk to consumers. We put the products on the shelf as that is needed. Obviously, we rigorously look at some of the KPIs that we find important behind the execution and follow up on those, hold people accountable. So all these things you need to do. And not surprisingly, you'll get results fairly quickly. A good example for that for us would be customer service levels. We were at best average. We declared that absolutely a priority. If you cannot deliver the goods to the retailer, it's unlikely that the retailer will work with you longer term. So we've put organizational structures in place, which obviously is where the CEO comes in, put reward structures and measurements in place, and then rigorously following through and holding people accountable. And you see the results, to be honest.
Despite all the disruption that we're seeing in the world economy, the sector has been reasonably resilient, or relatively resilient. How do you see margin evolution, the profit pool, if you will, for the industry growing? I mean, can margins continue to grow the way they've been growing?
Well, first of all, this is a very competitive industry, despite what people think. But the pressure on continuous improvement, the good enough never is in this industry is higher than I've seen it anywhere else. I like that personally. It's a three-dimensional chess, and I like that competitiveness of it. But the main reason I like that is actually the consumer benefits from that. I've been to too many countries in the world where brands were not able to compete. And without any exception, the consumer suffers. And we all know the countries or the geographies, and unfortunately we still have too many of those in the world where that is the case. I think if the industry continues to innovate well, there is no reason why you cannot have continuous margin expansion. This is an industry, I think, that gives a very decent return to its shareholders and has been good to its shareholders over a longer period of time. There's no reason why that should not continue. The world population will be growing, if we like it or not, from the current 6.5 billion to about 8 billion by 2030. And that will not only give you more people, but it will also, as they improve their standard of living, create other opportunities for products to expand. The consumer will continuously look, even after today's crisis, for products that are more convenient, that are healthier. Vitality, we call it, those trends are not going to disappear. And again, that will provide opportunities to create value. And that should ultimately translate into margin expansion for the industry.
A lot has changed for the average consumer over the last many decades. There's an explosion of choice in terms of the products that you're offering. But what's also interesting is the way that you communicate and engage with consumers has also changed.
Yeah.
The media is completely different. What does that mean for Unilever? What does that mean for the way that you think about marketing and engaging with consumers?
It is definitely more difficult to reach consumers now and engage with consumers. And marketing has rapidly changed from what you might call the push model to a model that you reach consumers when and where they are receptive. It's also true that there is quite a lot of choice out there, partly driven by the desire to innovate in this industry and segment the consumers. Obviously, I think there will be a trend back a little bit towards fewer brands, bigger brands, especially in this economic uncertainty. We see that gravitating back. I call it cocooning, a little retro to the brands they trust. And interestingly, especially people that are most affected by this crisis, the people concerned about unemployment or their long-term wealth, actually tend to gravitate even more back to brands, simply because they cannot afford to take the risk to experiment with other things. So I think there will be a premium on fewer, bigger, global brands.
To continue on the theme, though, of marketing, how does all this change? What does that imply for the marketing function? If you look at the brand manager as a key unit within a consumer goods organization, what does that mean for them with this explosion of choice in media and so forth?
The job of a brand manager has become more complicated. There is absolutely no doubt about that. Different media to reach consumers. If you now look at a campaign like, for example, X, over half of our spending there would already be in digital. And the digital space is evolving so fast. You know, what was YouTube yesterday is Twitter today, is an unknown thing tomorrow. So it requires a brand manager that is in tune with society, that is agile, very close to new technologies, frankly increasingly more global, and doing that with a broader perspective than just selling the brand and the brand benefits. As we talked before, lots of the social missions of the brand coming in, different stakeholders. So it is becoming a job that is a little bit broader and more of global scope, and that's why we've created in Unilever the global categories now.
In terms of Western Europe, it is on the one hand a very, very important market for you, for many of your peers. On the other hand, it's been a very challenging market to capture growth, also for you and for your peers. How do you see Western Europe evolving?
Certainly no doubt that this is a region that we have to create and can create shareholder value. As I've said many times before, Europeans are consumers also, and they're also human beings. And frankly, if you provide a consumer with a good value proposition, they're also able to take that. And value is not only price, obviously an important component of it, but value is overall performance and experience of a product. So I look at Europe as a growth market, to be honest. In one of my previous employers, one of their fastest growing brands was Nespresso, and it was doing that in Europe. And I can give you many examples of ourselves. So we just launched Temptation ice cream or Lipton Pyramid bags. So when we innovate and do that with the consumer in mind, also the European consumer, you can grow your business. I've been in many presentations in the different companies that I've worked for and others, where you first have to listen to how terrible the economic situation is, then you have to listen to how tough the government is, then that the retailers are totally unreasonable, then the private label this or that, and then the chart comes up that your business is down 5%, and we should all sigh a of relief that it's only 5%. That's not the mentality I think that you need in Europe. You can grow, and you should grow, but you know, part of a leadership is to see reality in the eye. So I think you have to be realistic about the growth rates, and that's probably in the low end of the 2, 3, 4% range for companies like ours would be very good.